Hey everyone, welcome back to Investment Research. I'm Simo, your equity research analyst. Today we're going to have an in-depth conversation about 5 top-ranked stocks that could offer great potential as we move through October 2025. In a market so heavily focused on the Magnificent Seven and big tech, many investors forget that opportunity often hides in smaller corners of the market. My goal here is to walk you through 5 strong companies, each with unique growth drivers and solid fundamentals, all identified by a proven quantitative approach that focuses on earnings estimate revisions. This approach is powerful because when analysts start upgrading their forecasts, it's usually a sign that business conditions are improving faster than expected, and that's often where future outperformance begins. Let's start with the first company, Remitly Global. This is one of the most interesting fintech plays right now, operating at the heart of the digital payments revolution. Remitly specializes in cross-border remittances, helping immigrants and overseas workers send money back home efficiently and at lower cost. What I find impressive is their clear execution. The company reported 34% year-over-year revenue growth last quarter, beating expectations and marking its first period of positive GAAP profitability. That tells me the business model is maturing and scaling well. They're also expanding into new territory with Remitly Business, targeting small and medium-sized enterprises needing international transfers. This diversification could be a major long-term catalyst. While the stock's momentum might look inconsistent, the growth engine underneath is solid. In my view, when you see earnings estimates trending higher and a company turning profitable, that's often the start of a strong multi-year cycle. Next, we move into biotechnology with Kiniksa Pharmaceuticals. This company has built its reputation around Arcalyst, the first and only FDA-approved therapy for recurrent pericarditis, which is a painful inflammation around the heart. The story here is powerful. Kiniksa is already cash flow positive, a rare milestone in biotech. Its commercial execution has been excellent, prompting management to raise full-year revenue guidance. What stands out to me is their focus. Instead of spreading themselves thin across many indications, they're dominating a niche area where they can lead long-term. Their projected earnings per share growth is over 270%, with sales expected to rise more than 50% this year. This combination of profitability, growth, and momentum makes Kiniksa one of the most attractive small to mid-cap biotech names out there. From specialized medicine, let's shift to oncology with BeOne Medicines. This company has a broad and diversified cancer treatment portfolio anchored by Brukinsa, a blockbuster therapy driving the majority of its revenue. But what I really like about BeOne is that it's not dependent on a single product. They have multiple late-stage drugs in development, including sonrotoclax, a promising BCL2 inhibitor that could open new revenue channels. Their projected EPS growth sits above 130%, and their revenue is expected to climb by over 36%. BeOne is a textbook example of estimate-driven momentum. Analysts are upgrading their forecasts, and that's reflected in both price action and institutional accumulation. For long-term investors, oncology companies with proven products and an advancing pipeline represent durable growth opportunities, and BeOne fits that description perfectly. Our fourth company, OpenLane, operates in the digital marketplace for used vehicles. It's a fascinating business because it's not a traditional car company, but a technology platform that connects fleet operators and rental companies with dealers through an online auction system. The beauty of this model is its scalability and efficiency. OpenLane doesn't have to own physical inventory or operate heavy infrastructure. It's an asset-light business earning steady fees. Their dealer-to-dealer volume rose 21% last quarter, and higher margin auction fees jumped 24%, pushing free cash flow to record levels. Management also raised guidance, showing confidence in what's ahead. For me, that's a sign of sustainable momentum. OpenLane's combination of value, improving growth, and rising profitability makes it a standout name in the digital infrastructure space for the auto market. Finally, let's talk about Coeur Mining. This one is a bit different because it sits in the commodities and precious metals sector, an area often overlooked until inflation or geopolitical tension reignites investor interest. Coeur operates several mines across North America, including its major Rochester expansion project in Nevada. This expansion is a big deal because it's transforming the company's production capacity and financial profile. In the last quarter, Coeur reported record revenue and cash flow, signaling that the investment in Rochester is paying off. Their sales growth projection is nearly 90%, with EPS expected to climb over 370%. Despite a lower value score, what matters here is that analysts are sharply revising earnings upward. That's the signal to focus on because it indicates a real turnaround underway. Now, when I look at all 5 companies together, what stands out is their diversity. We have a fintech innovator, 2 biotech leaders at different stages of growth, a digital marketplace transforming auto auctions, and a mining company emerging from a major operational expansion. This kind of sector spread can provide a mix of growth and cyclical balance for an investor's portfolio. Still, I always remind viewers that lists like this are not a complete investment strategy, but a starting point for deeper research. Markets can be volatile and even strong stocks can experience pullbacks. The key is patience and conviction. When you understand the drivers behind earnings estimate revisions and align them with your own investment goals, you give yourself a real edge. In my view, this kind of disciplined, data-driven approach helps cut through the noise and keeps you focused on what really matters. Companies with improving fundamentals, clear growth visibility, and analyst confidence backing them up. If you found this analysis insightful, make sure to subscribe to the channel for more research-based discussions and real equity breakdowns. I'm Simo, your equity research analyst, and I'll see you in the next video where we continue exploring more opportunities across sectors that are shaping the market's future.